The reason I'm really here is to introduce Peter Hall from the Economic Development Canada. He's Vice President and Chief Economist with EDC, and he joined EDC in 2004. He's responsible for overseeing EDC's economic analysis, country risk assessment, and corporate research groups. Prior to joining EDC, Peter directed the economic forecasting activities of the Canadian Board of Canada and has served as president of both the Canadian Association for Business Economies and Ottawa Economics Association. Peter offers expertise on the global economy with our geopolitical landscape. He's I think this is his fourth speech in 2 days, and he spoke yesterday at the BC India Network and is going to talk to us about the international landscape. Please join me and welcome Peter to the stage.
Thank you very much, Captain Marshall. It is a thrill for me to be with you today. I'm honored to be asked to come here. I'm a little frightened, actually, because I hear that you have heard from economists already inside of all of this, and you might have thought you were coming to a session because you didn't get enough sleep last night, and you might as well sleep through the economic presentation, right? Except the world is falling apart, and so you got to listen to it. You got to hang on every word that I tell you this morning, because I'm not going to talk as much about what is going on in the local economy. What I'm going to do, we at Export Development Canada are keeping our eyes on the world for Canadian business persons, bringing that in and then boiling it down to what it means at the local level. So I'm hoping to be able to shed some light on what has become a very murky picture for most of us. In fact, we share this with everybody in the rest of the world. The world economy has become very murky, and it's been that way for, I hate to say it, over 11 years, and it just keeps getting murkier and murkier as we go along. And so we need to ask ourselves some serious questions about what it is that's going on. And I've chosen a very provocative title. I know that much effort has gone into creating a foreign trade zone here in the island. And I'm asking, as you can see on the presentation there, what was our timing just really bad in terms of focusing on that area? Like, is the world sort of going to Hades in a handbasket right now, given all the mayhem that is going on at the moment? Well, I'm going to start with some really sort of even worse news. Canada's economy was very privileged back in 2008, 2009, because when we lost in the Great Recession 25% of all of our international trade immediately. Like, can you imagine losing a quarter of anything that you have right away, immediately, and wondering, well, how am I going to fill that void in? And Canada happened to have a very well-balanced domestic economy at that time, and the rest of the world was sort of looking at us and saying, wow, when it comes to a developed country, you guys have solid consumers, you have a very resilient housing market, you guys have banks that the rest of the world wish were as solid as your banks, you manage your public finances really well, you got resources, and resource prices came zooming back up again. What don't you guys have? Like, what is the formula that you have right now? Well, we, like the rest of the world, stimulated our economy at that time because, of course, when you lose 25% of a very important chunk of your economy, you rush in there and you want to rescue that. We all look to our governments in the entire Western world, and even emerging markets did the same, threw a pile of stimulus in, and in the rest of the world it was really needed. In Canada, we didn't really need as much as we poured in. And in the intervening period, we overdid it. So now the domestic economy that we are left with is not that strong economy that we had back in 2008, 2009. Our consumers are now heavily indebted. Let's put some perspective on that. Back just before the Great Recession, the Americans were the debt sinners of the world, right? And their debt-to-income ratio was around 165%. Well, over that period of time, Canada's has climbed past the American rate, and we are now just shy of 180% debt-to-income. And folks, that's what you call a bubble. Now, our housing market is the same. I don't need to tell you any stories about Vancouver. You're close enough to that market that you know that that market has been in bubble territory for a long time, and it's only gotten worse. And so the point behind that is that, we are really not going to make the most of our money inside of the domestic economy. I believe firmly, not just because I come from export development Canada, that the external side of the economy is where we are going to win. That's what the data is saying right now. We are not going to make our fortune on the inside of the economy. We are depending on the rest of the economy, the rest of the world economy, for our welfare going forward. Well, that's a pretty scary thing, because the rest of the world is not doing particularly well right now. And you're thinking, how long has this guy got? I mean, he hasn't even got off his title slide yet. Okay, well, let's go. What the rest of the world is saying to us right now is that they don't really believe that great things are going on. I love to talk to purchasing managers about what it is that they're doing. These are guys that operate in companies all over the place, and they've got to purchase the materials for your next run of activity. Doesn't matter what industry you're in. You can be in a factory line, you can be offering a service, you still have purchasers inside of your company. Well, 6 to 9 months ago, these purchasers were very bullish about things. And that's where you see the bright green up there. That's green is good, red is bad, and that yellow and orange stuff isn't that great either. And you can see that sentiment has changed. Canada and the United States have become more bearish. We're the good places in the world, folks, because when you go to Western Europe, there's some pretty nasty stuff that's going on in key economies. Germany is very close to recession. The United Kingdom is very close to recession. We haven't seen that for an awfully long period of time, folks. You've got some serious economies that are in slowdown mode. Are emerging markets going to rescue us with all of their fast growth and so forth? They're pretty bearish about what's going on as well. Folks, this is a ton of people inside of companies around the world doing purchasing that are telling us that the 6-month outlook is really not looking very good at all. We have a globe that is in slowdown mode. Well, there's actual data that talks about this as well. I get very worried when I see industrial production numbers that were doing well and are heading down to the zero line. I get even more concerned when world trade volumes have gone negative. Something seriously wrong about how things are moving around the world at this point in time. And so you have many people who are saying to you, we think we're on the verge of our next recession. They're looking at their watches and saying, it's been 11 years. This is typically the time when we would go into a downturn. So if we got a bubble in our domestic economy, and everybody seems to be saying we're going to have a recession from the rest of the world, a global recession, we're due for our next one, how does that make you feel this morning? Are you sorry you got out of bed? Sorry you came to hear this presentation at the moment? Well, I've got to ask you a question, is that real? I think that one of the dumbest ideas around the need for a recession is, well, we're about due for one. People looking at their watches. And it's like, you don't have to be an economist to come up with something like that. Any old person can say, well, every 10 years, so, let's just get hunkered down for our next one. No, the data in the economy have to substantiate what it is that's going on. So most people will look at this kind of thing and they'll say, well, it sort of looks inevitable. I don't know what's caused a thing to happen, but it's actually ground down. And if you stop there, well, that's where most people are at. They're just going, well, we're very myopic about how we look at things right now. It's like what happened yesterday is the most important thing to us, and we seem to forget about all the indicators, and we seem to forget about the fundamentals inside of a story like this. So folks look at this, and they just, okay, it's time to batten down the hatches. There's no opportunities out there. Here we go. Let's see if we can ride this one out. Except when you look at key indicators and their fundamentals, they are saying very different things than we experienced back in 2008, 2009. One of the key indicators of where an economy is going is its housing market. And I'm picking on the US housing market here because this is an economy that supplies an awful lot of stuff that goes into US housing. And one of the things about this last 11-year period of time is that US housing has not recovered. You know, we've never gotten back to the heyday period of time that we saw between 2003 and 2008, where we couldn't get enough SPF down into that marketplace there. We couldn't get enough OSB down into the marketplace there. We couldn't get enough of all of the materials that it takes to keep Americans inside of houses. Because back then they were building 2 million plus a year, and it was bubble. Look at what they did to themselves. This was the extent of the bubble inside of the US. Now, what does that actually mean? The 3,000 number up there is in thousands of units. So America had a surplus of housing at 3 million units. And you might think, okay, well, it's America. America can absorb that kind of thing, right? That's more than 2 years worth of basic housing start requirements, folks. So you could have shut the housing market down for 2 years, taken it to zero, and you wouldn't have run out of any houses that people needed. We had that kind of a surplus. This was a monster bubble. You want to know where they're at right now? They're not nearly as bad as that, but they must be in bubble territory, right? Because everybody is saying that we have to have a recession. No bubble, no recession, right? So we must have a bubble going on right now. Except we have the actual opposite going on right now in the United States. Because of the underbuilding that was happening, you still have demographics driving what the need is inside of the marketplace, but we've got this monstrous anti-bubble that's as anti as it was bubble in the pre-recession period of time last time around. You know what this is saying, folks? Let me interpret it for you, okay? Our situation right now means that the United States market could have very strong double-digit growth in housing for at least 2 years and not have a problem at all to worry about. No bubble creation, no nothing. You could go into excess and all you would be doing is using up this great deficit that is going on. Folks, this is one of many indicators that show that fundamentals suggest that we still have years of growth left in our economy. And you know, one of the other reasons that I like the housing market, as I said, it is one of the most dependable leading indicators of economic activity out there. There are other leading indicators that are saying nasty things at the moment. When I look at this one, and this one is arguing against what everything else is actually saying, I look at this one and I say, okay, well, there's a good fundamental that suggests very strongly that we have the opposite of a pre-recession condition. We actually have pre-recovery conditions inside of this particular indicator here. Now, this is a pretty good chunk of global GDP that we're talking about here that's governed by this particular movement. Well, if I go across the pond to Western Europe, I find the exact same situation. In fact, they've got a bigger anti-bubble than America does. And not just in the housing sector, but also in all of business investment. Well, folks, you're getting fairly close to 50% of global GDP that is in a pent-up demand situation. And I've never seen an economy tank when it actually had pent-up demand. It's got growth ahead of itself right now. Well, that's a big dilemma, isn't it? Because I've been the typical economist. I've said, on the one hand, we've got this. The world economy seems to be falling apart. And on the other hand, it's got no reason to do that. So have a nice day, you know? That's usually when we walk off the stage, right? No, I've got to tell you what it is that's going on here. What are some of the background stories to all of this? Well, we've got a real nasty that's happening in the world right now. This long in a recovery cycle, people should be happy, right? Unemployment rates are about as low as they ever get. The amount of labor force engagement in economy after economy around the world is very strong. And so we should all be saying, well, you know, I'm so happy. I'm not disgruntled when I'm going to the polls. I'm not going to march through the streets like an activist. It's too costly for me to do that. I'm making too much money over here. If I'm out there demonstrating, I'm missing out on millions of dollars worth of global business deals, right? Except the exact opposite is happening, folks. This is what a Guardian analysis of the economy is telling us is going on. We've got populism rising on the far left, we've got populism rising on the far right, and we've got populism rising right in the middle there as well. All three categories are rising. This never happens. This is very, very strange. Why is our world going crazy in this kind of sense? So I'm just about to have a slide malfunction here because this was only supposed to be half of the slide. So I don't know exactly what's going to happen when I hit the next button here. So we created two charts. That's very clever. I decided, okay, well, I got to have a bigger horizon for this. How can I put today's populism in context? Well, Bridgewater Associates did that for me. They clipped newspapers going right back to 1900. And they said, okay, how can we put this in context? Is there another period of time where we've seen populism rise to the extent that it's rising right now? And the last time it happened was in the Great Depression. Folks, we live in unusual times right now. Why is this all going on? Why in a prosperous economy are people getting more and more cranky and they're actually out there being more activistic and now electing populist leaders who are out there saying, yeah, you know, we know you're unhappy and it's the Mexicans' fault, right? Or it's China. China has ripped off all of your jobs right now. This is the story. And so what we need to do, our big solution right now is that we've got to build walls. We're going to build a wall, right? That was a bad imitation, okay? But you get where I'm going here, right? We're going to put border adjustment taxes on our most friendly neighbors ever. We're going to tear up free trade agreements. They did. The Trans-Pacific Partnership is in shreds as far as the Americans are concerned. And we're going to tear up that NAFTA deal, one of the first landmark big deals that was out there. And all of a sudden, the world is a very different place. And people are eating it up like it was the best meal that was served in front of them. What on earth is going on? After all of the prosperity that we have seen come out of things like globalization and post-war institutions that have created some of the most prosperous conditions perhaps in human history. I don't think I'm overstating that, including economies from all over the place that were shut out of things. Now, technology enabled that as well. But folks, we have institutions that have created prosperity beyond our wildest dreams for around the world. What they get is not taking away from what we have. That is a falsehood that is being spread. You know, we are still generating unemployment rates that are far lower than we economists thought were possible without wild increases in inflation all over the place. We don't see inflation increasing all over the place, but we see these very, very low unemployment rates. Okay, so why did so many people get so annoyed inside of this context? If I'm right, and things are still structurally very sound, what happened here? Well, folks, one of the things that globalization has done to us, and most people have missed out on this very key point, is it's taken a 10-year global cycle and it's stretched it out into 20 years. And basically what's happened inside of that is we have longer longs, we have higher highs, bigger bubbles at the end of those very long periods of time. Do you know that the bubble that was created in the global economy at the end of the last growth period, the 5 to 7 year period, leading up to 2008. It was a bubble that was exported everywhere. That bubble was almost as long as the growth cycle of a normal economic cycle. You had bubble everywhere. That's why you have big crashes. You have lower lows as a result of this stretched out cycle. Everybody panics. So governments get involved and they throw tons of stimulus into the economy, creates the illusion of recovery. And then we're back to all kinds of nothing for many, many years. Why? Because we have to get rid of that big bubble that we built up, right? Got a big bubble, got to use it up. And there's all kinds of extra stuff out there that has to be absorbed in the economy. Think about the average business, right? Businesses love bubbles. They don't know that it's a bubble. They invest into that bubble. People want stuff. We're going to invest so that we can feed the machine. When it gets revealed that there's a bubble, what happens to all of that investment? Well, you can't get rid of it, right? The buildings are still there. The machinery's still there. The bank might repo it, but they'll sell it off to somebody else for 25 cents on the dollar or whatever, and the capital stock stays there, and it has to be used up. And if it's a 5 to 7 year excess, it may just take 5 to 7 years to use that excess up. And what happens to people inside of all of that? Well, people get left behind. Do you know one of the strangest things that happened in the last economic cycle was, as the unemployment rate was coming down, what should happen? As the unemployment rate is coming down, more people should come back into the labor force, right? And we measure that by labor force participation. Well, as unemployment rates were coming down, folks, participation rates were also going down. They went down for 8 years. You know that in age class, right across the developed world, we were asking people to wait 5, 6, 7, 8 years in some cases, either for their first meaningful job or for their next meaningful job. Can you imagine having to sit on the sidelines for that much of your life? That is pure duress. And so you might be worried about a situation like that, if you're the person, but all the people that are around you that love and care for you are also very concerned about that situation. They have now become over 50% of the population in many cases. And even although that has turned itself around and participation has rocketed up over the last 3 years or so, and people are engaged again, so low unemployment rates are actually effective in the economy. They're generating incomes, they're creating labor force pressure all over the place. If you've had to wait 5, 6, 7, 8 years for that to happen, you're still not happy. And this populism is actually something that is governing how we are creating policy going forward. Well, why do I rant on about this? Why is this important to us right here and right now? Well, folks, the very simple point that it makes is fundamentals are strong, and just when we were having the real recovery that we had waited so long for, we gave up on the structure. And we're undermining the structure right now with destructive policies that are unwinding the fabric of what has brought us so much prosperity over time. So it's a huge dilemma. We have fundamentals that will carry us forward. We have policy that seems to be getting in the way of that. Okay, so how do I drive this forward? Well, look at the world. Look at the major trade tensions that we are dealing with at the moment, folks. We've got a North American situation that is quite worrisome. Just in the United States, you have 24% of global GDP. You've got Europe that is dealing with the EU Brexit thing at the moment. It might be far away at the moment, but you don't want to have British in your name at this point in time, when a Brexit thing is going on and taking the greatest trade nexus in the world and throwing it into confusion. That's another 20% of global GDP. Throw the US-China spat into that, and folks, 60% of global GDP is tied up with trade acrimony at this point in time. Very serious stuff. Where 25% tariffs are going on half of everything that America imports from China. And this is supposed to be some kind of solution. Americans are paying more. Chinese are really feeling the pressure right now. You know that if the EU, if Britain goes out of the EU right now, Bank of England studies are saying this is going to cost between 5 and 8% to the UK economy. It's also going to be very damaging to the EU economy. Getting a little ahead of myself here. I get passionate about these things, right? But let's put that 5 to 8% into context. The average developed economy in the Great Recession lost 4.4% of their GDP. So the near side estimates of the carnage that would be caused by a no-deal Brexit are greater than the Great Recession, and it only gets worse. Could be double the impact on that economy. What are we actually doing to ourselves right now? What on earth is going on? Well, even the Chinese are getting a bit freaked out about this. There is the Economic Policy Uncertainty Group. They're at policyuncertainty.com there, and they measure policy uncertainty around the world. You know that there is no place in the world where there is greater policy uncertainty than in a place that is a command economy, where everybody's supposed to be in charge of the formulation of policy and so forth. China is like no other place on the planet right now, freaking out about what is going on at the moment. That has to be related to day-to-day activity that is unraveling inside of that economy. People are very worried. They're worried around the world. But I'm showing you that even inside of China, where everything is supposed to be secure and governed by a central authority, they are very worried about what's going on. They're more worried than in the Great Recession. And the Great Recession carved out a huge chunk of the Chinese economy. Trade at that time was 60% of the economy, 65%, I correct myself. In 2.5 years, it had dropped to 45%. Well, this is pretty serious stuff. At the end of the stimulus period, things were pretty bad inside of China as well. You see another spike in uncertainty. And then the US election caused them a lot of grief, but they're even more worried than that now. because of things that are actually going on inside of their economy. Well, how do we explain what it is that's going on? Where's this slowdown actually coming from? I think this chart will be really helpful to you. We get a two-speed growth thing going on. So what is happening? Well, we can see that international trade activity, business investment activity is collapsing around the world. We can also see that international trade, Canada's a bit of an anomaly here, but if we look at the US, Germany, and the UK, some serious declines. This is what's leading to this sort of recessionary activity going on. Folks, when you have these major chunks of the economy that are going south on us, this is a pretty serious situation. But in every single one of these economies, the part of the economy that drives at least 60% of activity, 70% in the United States, is actually growing very well, no more than in the United States. The scale is ruined by the extent of expansion inside of the United States. And you might think, well, whatever, two-speed growth, what does that really mean? Folks, this never happens. When an economy goes down, if it's really going down, it goes down and everything goes down. And in fact, it doesn't ever happen this way. Typically what happens is that consumers go down first, and businesses take a long time to catch up to that reality. There's something that operates inside of the economy called the investment accelerator. The investment accelerator takes a while to react. Why? Because, when businesses are investing, it takes a long time to get those projects through, right? They can't turn around things on a dime. Once you're committed, you keep the project going. You keep that building going. You keep that equipment coming in and so forth. You just have to sort of suck it up. But that typically takes a while to react. Here we've got the opposite happening. What is happening here? Why has business investment reacted as quickly as it has? The key point behind all of this, folks, this is a self-inflicted wound. We have taken policy and wrecked a good situation in the global economy. So, okay, I still am not answering the question here. Okay, we get that. Policy is actually the thing that's standing in the way. How do you see your way through all of this? Well, here's our 2019 growth outlook, and this is the year where we're getting kicked in the teeth. You can see that there is a slowdown that's actually going on in places like Mexico, which is very close to the line here. Western Europe has ground down from a rate of growth that was quite a bit higher than that. These are not great numbers as we see. The United States seems to be doing okay. Fast forward to 2021, and these numbers are looking pretty spectacular. They're all, or most of them, are above long-term potential growth rates inside of these economies. So are we out of our minds? Are we just sort of waved a wand across all of this as economists and said, oh, we'll get through it somehow. The fundamentals will drive things forward. This is where it is that we're going. We believe that by the midpoint of the second quarter of next year, and being very specific with you, we will have resolution on all of the major trade impasses out there. Now, I've just said something really important to you folks. The world economy is hanging on something like this. And I don't think very many people are actually being as bold as to put a time stamp on this. I actually think there might be major resolution before we get to the end of this year. Why is that? Are we out of our minds, or is there an underlying logic that drives what it is that we're doing? Okay, let's talk about the United States. The United States, bravado, taking China on. What do they have to lose? Well, trade flows are beginning to be hit in a very serious way, as the last chart already showed you. Investment, we can see, in the #1 economy of the world, the most entrepreneurial economy of the world, is actually stalling in a big way. Elections and recessions. Folks, an incumbent president never gets in if an election or if a recession has actually occurred or is occurring. It just never happens. Look at all the elections that have ever happened in the United States. You never get back in if there's a recession. If you're the cause of that recession, then you're in a lot of trouble. This is a Section 232 security tariff-imposed recession that is actually happening around the world. Now, the good news about that is that Section 232 is not in the hands of many different legislative bodies that have to be negotiated with. It's in the hands of one person. So it might have been causing all of this damage. One person can rectify all of that. The President of the United States decides that he's had enough and he rescinds all of these Section 232 tariffs, he can do that with a stroke of his pen. That's how quickly things could actually flip around. Folks, the case is becoming rather compelling for America actually doing something about this. They don't have all the time in the world, and if they know that this is a self-inflicted wound, and I believe that they do, all the central banks of the world, by the way, are telling them subtly, not too subtly in some cases, that this is the case. This is not a necessary recession that we're heading into at the moment. Okay, so the United States, you know, they've got lots of incentive to do it. They've got all the tools to be able to do this. But China's just going to wait on the sidelines, right, and see all of this through. They've got lots of money. They've got lots of patience. They've got lots of clients around the rest of the world. China doesn't have to worry about a thing inside of all of this, right? Well, wrong. China's very trade dependent at the moment. China has tried to become a consumer economy. To date, that's been a flop. They started off, consumption was 40% of GDP. Consumption is now 40% of GDP. No change over the entire period. Investment is tapped out inside of China. They've been pushing on a string inside of their economy. Tariffs are clobbering their economy. From all of the indications that we see right now, they are really in dire straits as an economy. Recession and stability, look at Chinese history. You make a wrong decision about a recession, and regimes can change. There's not enough time to go through all of this. There is immense pressure on China's side to actually get things done. How about Brexit? Well, the United Kingdom, I've gone through some of the things that are going on. They're already experiencing capital flight. The auto sector is bailing out. They're moving to the continent. London's financial center is a big thing for them. They don't have any capacity to actually do their own trade deals. Europe's done them all for them. There is no bridging strategy. They don't have a plan going forward. And I said to you already, this is going to cost them 5 to 8% of GDP. Even Boris Johnson wants a deal, folks. How about the EU? Can they sit on the sidelines in all of this? No, they can't. They are pretty close to recession in some cases. I already mentioned Germany. The economic cost is not just a cost to the UK. There's a very substantial knock-on cost to the continent. There is continental populism. They are not free from the scourge that has hit the rest of the world. There is fractiousness over there. They want to win out of Brexit, and they certainly don't have policy room to stimulate themselves out of this. Their fiscal policy is tapped out. Their banking sector is quite weak at this point in time. Folks, that's why we believe that the prosperity from the rest of the world is something that is going to come to this zone and other places that are outward looking at this point in time. Angle yourselves for the business that is going on out there, and there will, we believe, be quite a few years of prosperity left for us. I wanted to inspire you with this. We know that the United States is customer number one. It's the dominant thing for us, less so for BC than for the rest of Canada. But I wanted to share this with you because when you actually look at our situation, you know, here's sort of where the United States is, and we got a bit of a scale problem going on here, but I'll fix that in a minute. China is far below in terms of overall penetration. By the way, these are BC numbers that I'm talking about. This is exports that we do to other countries. The United States is dominant. There is China, and I just thought for the sake of it, I would throw India in as well. I was giving this presentation last night. I worked these numbers up. If you run forward at the average rates of growth over the last 18 years, this is sort of what the future is looking like. Here's where America goes. So America's always going to be that super dominant place, right? Wrong. If we run the numbers forward, folks, by the time we get to the end of this, China becomes your customer number one. And some BC businesses are already experiencing this. China, for them, is already number one. You get the inexorable growth going in a nation like that. The basic amount of growth that people are talking about inside of China is 6% a year. At 6% a year, they generate as much GDP as they generated way back in 2004 to 2006 at 18%. That's the power of compound growth. And at 6%, they're creating a new Italy every 2/3 of a year. This is staggering stuff. I could go on and on about the power of 1.4 billion people that need to be fed 3 times a day and all the other things that go into sustaining working life. We have no idea what is happening on that particular front and what it offers to us. But you are doing business at a gangbusters pace with India. While you are growing 11.5% a year in terms of exports to China, you are growing at a compound annual growth rate since 2009 to India of 40% a year, 40 every year. Can you point to me anything inside of the world economy that is growing anywhere close to that on a compound annual growth basis? Who are the wealth managers inside of the room? You'd love to get a hold of that piece of action, right? And if you continued that at half of that growth pace, this is where India would be in terms of overall exports to the rest of the world. It crosses over China before we get sort of 25 years out, and it crosses over the United States not long after that. And I don't think there's any good reason why you couldn't expand to India at a 20% annual pace. China's exports for a very long period of time were over 20% a year as they were going through their growth phase. I could go on and on about this. Folks, there is a world out there that is growing, and there are parts of the world out there that are growing in an explosive way. And what I wanted to share with you this morning is that inside of the province here, and I'd venture to guess, we don't have the data on it, from the island here, you are already doing this kind of explosive growth to the rest of the world. So there's growth, and then there's explosive growth that's happening out there. I hope you find that inspiring. I am trying to engage as many Canadians across the country in this particular story because I believe that this is open to anybody in the world. We know that, but there's no good reason why. There is no structural reason why you folks here on the island could not be participating in this story as well. And I commend those of you who are already participating in this story. Is this something that can continue? Well, folks, we have no idea. When you look at the emerging market space, Brazil is adding to its middle class by 5 million a year. Indonesia by 7 million a year. That's a staggering amount of people that are going into it. India leaves them behind, 20 million a year, and they want to raise this to 30 million a year. And they could go on at that pace for 20 years and not run out of people in this story. China, folks, is adding to its middle class, even with everything that is going on, by Canadian population every year. Now, what happens to folks when they become richer in this way? They're all going into the middle class, they're consuming more, they're consuming higher value added. All of a sudden, they start needing the things that we offer. And you know what? They love Canada. They love Canadian food, they love Canadian wood. They don't know it, but they love Canadian minerals, they love Canadian coal. I wish you could put made in Canada on chunks of coal because, that would be really good for the situation here. Folks, we can't send enough over to China, and we're doing even more in India. And India's got a lot longer runway in terms of this whole picture. Okay, I got to come to my summary here because I think I ran out of time about 5 minutes ago. But anyway, what have I told you? Global slowdown is in the works. There is a possibility of recession out there, folks. I don't want to hide that from you. But this recession is something that is totally unnecessary as far as I'm concerned. It's self-inflicted. The fundamentals of the world do not argue that this is necessary. Trade resolution, we believe, quite likely. If that's the case, there are some serious positive implications for us. We believe that there will be an export and investment revival. There are the hot markets, there are the explosive markets out there. Is this a good time, folks, to have created a foreign trade zone here on the island? This is absolutely the best time. Why is that? Okay, so if you want a picture of that, I'm going to move on from it right away. Lots of people taking pictures here. Okay, here we go. What's the strategic advice I can give you out of all of this? When I tie it all together, what can you do today as you walk out of here? What are some real tangibles? Well, if we're right, and everybody's getting scared away by all of this activity, and there's a lot of stuff that's being parked on the sidelines here, folks, they're creating a void that if growth is strong, and if we're going to see this resolution happen, which economic logic suggests is the only natural outcome, then this slowdown is going to be intermittent. And those who actually run into that void might be able to ink business for themselves that everybody else is running away from. They're creating an awesome opportunity for you to do businesses and supply chains that you might thought you would never have gotten into. And I say this with a bit of authority because we've been talking to businesses out there and they've been saying, you're absolutely right. We can't believe it, but big multinationals are coming to us and saying, hey, we are not only wanting you to do business with us, we are critically needing your help at this particular point in time. And they're not saying why. I'd venture to say it's others that are very scared about the situation that don't want to invest into it. Folks, there's an awesome opportunity here to go for the gap. Second thing I would say is, if we are right, and the numbers say this is the case, that all of this scaredy cat factor out there in the world because of policy mayhem is holding investment back, that's investment that isn't going anywhere. It's not disappearing. The money is still there. You know, companies are trying to figure out what to do with all of this money. You know what they're doing? Many of them are doing share buybacks. Well, why do you do a share buyback? Well, if the only thing out there that you believe in is yourself, then you go out there and you buy yourself out there because you don't know what else to depend on. But it's not your first line of defense. That's not what you want to do. That's not what is going to earn you the greatest amount of money. You're supposed to be out there creating new space for fulfilling all of the orders that are out there. That's what all of that money is there for. And you know what? Things turn around. The world becomes a different place on a dime, and all of a sudden you've got this great wall of money out there that companies have been sitting on that does what? It washes into the world. And I, for one, you know, sort of picture Canadian exporters, and I'd love to picture you out here on the island. You get this because you got a great surfing zone, right? You were like exporters sitting in the surf and you're waiting for that giant wave to come along. And if you don't know it's going to come along, it's just going to crash over the top of you and you're going to get swamped by that thing. If you're ready for it and you know you're getting going when that wave is coming in, this is a monster wave that is coming in. And I want all Canadian businesses, I love island businesses here, to be able to be the ones that ride that to perfection right into shore. And so our second thing is surf the surge. Go for the gap, surf that surge that's on the way. And the final thing I would say is, with all that I have said about what's going on in the rest of the world, dare to diversify. Now, folks, this isn't just some economist that has come to talk to you here. I stand with my organization and say, look, I'm telling you to do dangerous things here, okay? But we're a financial institution. We sell financing out there. We sell insurance that ensures that you're going to get at least 90% of what it is that you're doing with a foreign entity coming back to you. And we as Canada will fight for the remaining 10%, and we're pretty good at collecting. And so that's what our offering is inside of all of this. It's a risky place, and we try our level best to be international risk experts so we can take on the risk and you can take on the world. Thank you very much.
Peter, I'm awake. I'm awake. We have time for a couple of questions, so raise your hands. We have some people with mics out there. We have one right in the front here. Gonna make you do your exercise.
Okay, so folks, it's a really big room. Don't be shy. Let's just all be brothers and sisters here right now and feel very free to ask whatever question you have. Yes.
I'm Livy from CYEA, Chinese Young Entrepreneur Association. We're trying to set up a bridge between Canada and China. So my question is there any specific program from EDC in order to help, support, and aid Canadian company and the brand to enter into the Chinese market?
Sure, so that's a great question. We have offices inside of China. So with everything that is going on right now, we have offices in Beijing, Shanghai. We also have a very active consulate in the Hong Kong area as well that's keeping on top of all of the developments that are happening there. So we already have offices in place that are very eager to welcome Canadians that are going into the Chinese market, or if they're not wanting to go into the Chinese market right now, we've got a lot of expertise here in Canada where we will talk about the entire risk spectrum, who's doing business inside of China, what entities inside of China. We are attaching Canadian businesses to, all that information is available to anybody who is there. When we have the case to do it, we have run special trade missions to China. So we have gotten our officials together. We've made sure that we can connect with the appropriate officials inside of China. And then we have business people on both sides that we are matching together as well. So those are all services that over the years we have actually supplied. I know that things are very dangerous at this point in time. Many Canadians do not want to go because of the issue that we have at this particular point in time. It is dangerous. I don't want to hide from that. However, the opportunity remains there. We believe that with resolution with the Americans, we will benefit from that in terms of resolution on the Canadian side as well.
Okay.
So, an excellent question. Thank you very
Great.
much.
Do we have another right back over
Way back
there?
there.
Yeah.
Tom Zaban, Reliable Controls Corporation. Excellent presentation, really awesome. Do you think low interest rates around the world are a leading indicator or following indicator of the low growth that we're seeing? Or do you see any time between the two?
So you must have taken some economics at some point in your career. That's a very economics-y question, but a very relevant question at this point. Yes, the yield curve in particular is an indication of a coming recession. So when you take 10-year government bonds minus 2-year, that's a standard measure of a yield curve. It should be very positive. And it still is, but only this much at this point in time. So the yield curve is inverting. By the way, the only place that the yield curve has actually inverted anywhere on the planet is here in Canada. So we've actually got those negative spreads at the moment, and that's a bit of a yikes moment because that is a very reliable indicator of things going forward. But how do we put context on that? Is that actually saying, okay, well, the economy is tapped out, we're at the end of an economic cycle, and so everything else that you said is rubbish, you know, you're just selling something, you know, here, can you buy the watch or what have you? We have lived through very extraordinary monetary times. And so, you know, even although the European yield curve hasn't inverted, their interest rates right across the spectrum are negative. Now, I don't know, I'm gonna need help from somebody in the room here, because does anybody understand a negative interest rate? Like why I could go out there and borrow like a drunken sailor, with respect to all the sailors in the room that we have here, the one that announced me as well. You know, and I get paid for doing that. Like that just seems ridiculous to me, but that's the situation they find themselves in. Okay, so why? Well, monetary policy was tightening very nicely in the United States until all of this happened. Monetary policy was tightening in Canada. Mario Draghi, at the head of the European Central Bank, said, I can't wait until I can tighten monetary policy in Western Europe. I would love to be able to do that before my term is up. He's actually done the opposite now. He's into easing. The Fed is easing. The Bank of Canada is easing. The Bank of England is easing. What is going on? In each of the reports that they say on easing, they are saying, look, this is something that has to do with trade policy disruption and the uncertainty that that is causing businesses. It doesn't need to happen, is what they are saying there. And so Chairman Powell has very carefully said, don't misinterpret this, folks. This is not an easing cycle. These are a few changes that are getting us through a rough patch in the economy, but they're not necessary. And he's just said in those few words exactly what I'm sharing with you now. When you look at the fundamentals of the economy, we are still very much in growth mode. So I believe what's happening right now on the interest rate front has been caused accidentally as well, and rarely, but this time around, is not telegraphing a drop in activity out there. I know I took a long way around for that one, but there is a preponderance of information that needs to go into that answer to convince you that that's where things are at. And I'm getting a thumbs up from that question. That's great. And we've got some way at the back of the room. I commend you guys. You're not being shy. Don't be shy. This is your time. I'm your personal chief economist right now. Ask me whatever you want.
Who has a question?
Yeah.
Over here. Here, I've got a mic for you.
Hi there.
Councillor Chambers from the District of Saanich, and maybe I missed the part when we talked about the environment, and last time I checked, the economy is very much about the environment and the management of our resources, and I'm wondering if you have included in your calculations of our recession climate change, and if you're looking at climate change as a symptom of our world economics.
So this is a cause and effect question. There is definitely a correlation between environmental deterioration and economic growth. We're not going to hide from that at all. And our great global dilemma at the moment is trying to manage these things going forward. Well, in answer to that, I would say that one of the greatest gifts that the Great Recession actually brought to the world was far greater environmental sensibility. And you might think, well, that seems really counterintuitive. I mean, when the chips are down, everybody's doing cost cutting, and one of the first things to go is anything that we're spending on the environment. Well, the exact opposite was the case, and it came from a very strange part of the world. Emerging markets that had been experiencing explosive growth knew that they were in political instability danger zone because they had not monitored properly environmental degradation. So when you look at how much brown coal was being burned to generate energy for factories and for general electricity inside of the Chinese market, people were dropping like flies because they did not have enough breathable air. They did not have proper potable water. And so over this period of time, the pressure was rising to do something about this. You know, against the leaders who around COP21 tables and things like that were saying, well, look, you know, the industrialized nations now got to where they are by polluting, so we have the right to pollute. And so you've got to give us some slack. We've got to have a different treatment than fully industrialized nations. We can't afford to do that now. And they discovered in 2008 that they too could not afford not to do this. And so when the economy tanked, and hundreds of billions of dollars were released for stimulating the economy, hundreds of billions of those dollars went to cleaning up the environment. It was one of the greatest things that I believe has ever happened for the environmental movement. Collectively, across the world, there was a grand realization that all of us are part of the problem, and we all need to throw money into changing things and the way that they actually go forward. Well, that's the way that you build something that's sustainable for the entire planet, because if everybody is doing it in sync with each other, realizing that we all have to bear the cost of this, then it's not a table-tilting exercise. And I believe that we are still riding off the momentum of that right now. So for us at EDC, we are very much about standing behind clean tech initiatives. I'm going to be speaking at a conference inside of 2 weeks in Toronto, in the Mars district there, on the very issue of clean tech and how it dovetails together with the economy. So I am sorry that I did not incorporate it into my main presentation. It wasn't the core topic of the day today, but it is something that we are very sensitive about and something that I believe is on a very positive track. Our own election underlines the amount of social concern that there is around this issue. And so we as a financial institution are taking that very seriously, and we are throwing our resources in that direction as well. So thank you for giving me the opportunity to talk.